That's coming through. Yes, it is. Beautiful. Good morning, everybody. How's everybody doing today? Welcome back to the private mentorship and welcome to webinar number 156. I believe that annotations are disabled, so I think we're good in that regard. And we got a few things on the agenda today. So I think we will jump right into them. Let's move this over. There we go. Cool. It can be up here as well. Very good. Maybe that will make it one file, which should be very helpful if I can do that. So the plan for today, let's let a few people shuffle in really quick. But good morning to absolutely everyone here. What's up, Dante, Olay, Jamie, Shellings? Always good to see you guys. Jesus, I know you need some help trading. Jesus, I got you. Nicola, Jimmy, Kika, Dan, always a pleasure seeing Dan. Very cool. If I don't say your name, okay, just know that I see it. Just looking over everyone and saying hi. What's up, guys? So before we start today, here's Dan. Best part of trading is that everyone's journey is unique. The worst part of trading is that everyone's journey is unique. That's pretty accurate. It's I'm sure a lot of you have started to learn this, especially if you're here a little bit longer than just being a complete beginner, right? Where you start realizing that one of the coolest things about the industry that you're in is that you get to build out your complete, own system. You get to build out your own confidence. You get to build out your own criteria, your own results, your own system. Everyone can hear me, right? Just making sure everything's working before we get really into it. But Dan's completely correct, right? You start realizing how much freedom in terms of what you're able to do actually exists. And because of that, you also realize how much you actually have to do in regards to it being a shitty thing, because there's not just a simple follow this play by play and you're going to make money, unless you're on Instagram, on the Instagrams of the world or whatever, right? Yeah, new camera angle from last week, I think. So yeah. Now, a few quick things. A lot of you might be aware, I'll just do it very quick. The competitions are back up, okay, on Men Funding. So make sure you're signed up. It's completely free, and there's not even many contestants right now, which is like absolutely amazing. You stand a completely free chance to win, whatever's in here. You have a chance to win a real evaluation, which is one step and leads you to a real account. And more beautiful than ever, right? You can just put your system to the test. You can fail. Doesn't really matter. You can just get a little bit better by being part of these every day, because as you know, one of the best ways to improve, especially after you've created somewhat of a system under your belt, is to begin to actualize it. This is something that I've spoken about a few weeks in a row now, but very simply, when you have an actual system that you've tested quite a bit, and you've gotten quite used to it, you maybe have a little bit of data under your belt, you're starting to see profitability in terms of your back testing, right? Because remember, back testing profitability is not necessarily live. But the cool thing about having a good bit of data collection or a good bit of back testing profitability is that you actually have that data there. It's proof of the fact that what you're doing is leading to some kind of EV. It's leading to some kind of results. And the most important thing for you at that point is to actually put those results to use, whether it be through a funded account, whether it be through a simple evaluation account, whether it be through a simple forward tested simulated account, a small live account, whatever it might be. The point is, it's very important that you begin to understand how your system is going to operate with your schedule, with the time that you spend on the charts, with how long when you're actually live, you'll have to wait on the charts, because as a lot of you know, one of the biggest issues that happen to most traders when they transition from backtesting to live is what? The inability to experience time. right? So yeah, it's waiting, it's patience, right? Because it's very easy, as I love to say, for all of us on any pair. So let's do gold because we've been looking at it for a while. It's very easy for us in a back testing environment to go, here I go. I showed up randomly to a brand new market. Can I do anything? Nah, I'll wait for it to be in overall accumulation to the top side. I'll keep waiting. I'll keep waiting. I'll keep waiting. All good. Okay, it's starting to break out. Maybe I can start watching here to potentially go higher, right? And then you start watching from that point onwards. Then you stop watching for a bit and you start watching again. And finally, you get the market right and you get to catch a beautiful trade. Or just after that time, after all this time actually, so let's even make this better. You see all this happen, so then you go, okay, I'll start following it around here. And all of a sudden, you finally catch a proper move. And as you know, the last few months of this mentorship, we've been in this move. But what's funny is that same testing that we just did started from right here. And in reality, we just looked at about 232 days of data. Okay, I want to remind you guys that's over 2/3 of a year that we just skipped in less than 14 seconds, 12 seconds of the webinar. Okay, anyone can do the work that is required prior to find that you have an edge. That's the very, very starting point, and that's something that a lot of you should be focusing on and are focusing on and probably have done. But the problem is that if you're just stuck there, constantly just refining a back test, constantly just making your back testing curves, constantly just working on those back testing curves and being like, damn, it's so good, but you're never putting the things that you've tested, especially when you get to 200, 300, 500 plus trades, the things that you've tested for 200, 300, 500 plus trades and are proven to be profitable need to be put to work in some aspect, because you need to begin to understand what it looks like for you to do this live. Because if you don't, as I've seen it happen to a lot of people in the recent weeks, because I've had a few messages about this, especially from newer members, the second they get on the live charts, they start to take a lot more trades than they're actually used to. They're taking close to everything that sets up. They're taking a trade every single day because technically, and all of you know this, there is always a trade available. It doesn't matter where I go in the market, even right here, today, okay? Is there a trade, Anton? Well, maybe it can go. Okay, I'll look at a lower time frame. You know, I don't really, maybe it can go. Okay, here I go. It came down. Maybe if it just goes up a little bit, I can take it. Okay, it's good. It's good enough. I'll take the long. Please, come on. Just tap me in. Okay, I'm in. Anton, I bought the ICI. The MB got bought. What happened? It's like, my man, you realize all the testing you've done has proven that it makes you money when you trade around this area here, this area here. So by that comparison, is what's happening here anywhere similar to what happened in those prior two areas? And the answer instantly becomes no. And then you look at that and you beat yourself up over it. You look at it and you say, why am I trading in the areas that I know I shouldn't be trading? Why am I constantly entering when the rules are not met? What am I doing? I need help with my psychology. But the reality is you haven't put your tested system to work. You haven't begun to experience the things that you had experienced backtesting in 2 seconds for 2.5 years, right? 2/3 of a year, we did in a few seconds. You haven't begun to experience that live, where you show up to a day, because remember, each one of these candles represents what on this time frame? 1 day. And the reality, for my system at least, is if I'm not in a trade from these points around here, I have to sit on the sidelines for each one of these days until price does what I need it to do. Go into a new stage 1 out of its initial push. So this, and only here, and a lot of you might remember, around 19th of March, this is when we began to watch it, that's when I continued to watch the market. But what you don't experience, or what you don't feel and see live, what you don't actually see when I show up to these Sunday webinars, when you show up to your backtesting, when you don't show up to your live markets, what you don't see is, yep, when I showed up on this day and price was here and moving higher, I said, okay, see you tomorrow. When I showed up the next day and price was here, and I said, okay, see you tomorrow. When I come on the next day and price is here, just to really get this point across. Because remember, that's 24 hours I just sat away. Here I am the next day. Can I get into a new trade? No, because it's not met my rules. I have to wait for a stage 1. That's 24 hours. That's a whole day of trading. Next day. Has it pulled back? Has it made a new stage 1? Has it gone sideways? No. Okay, that's 24 more hours. That's an entire trading day. That's me showing up, doing nothing again for now over a week. Here I go. Can I do anything? No. It has not gone into a stage 1. There is nothing for me to do. Price is still not going sideways or going into a stage 1. It is still moving higher. This is not a tradable market for me. Can I trade it? No. This has now been 2 weeks of me showing up to one asset and not being able to do a single thing, because I know my edge lies in entering in the initial moves out of the MBs, out of the MAs first, and then after it corrects and makes a new stage 1. So nothing still. Nothing, 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 nothing. And around this point, I began to send out signals or analysis that I was starting to expect a brand new reach in price higher. It didn't happen here. It didn't happen here. It didn't happen here or here or here or here or here or here or here. Those were examples of me showing up every single day, doing the same work that I do any given day, and allowing myself to say, there is not a single thing that I should touch here. Now, this concept plays directly into the most recent one-on-one that I released to you guys. I released it yesterday, and I highly vouch for it that you go and watch it after this webinar, either today or tomorrow or the next time you have some off time, okay? Because I can't force you to do anything. I don't want to fuck with your schedules, but make sure you see it. And that's this video right here. So hopefully some of you have seen it and might be able to speak on it a little bit right now. But this exact kind of idea is shown, and why it's so important, in this one-on-one right here. The reason it's so vital is because this member, even after being a member here for a while, after having taken multiple one-on-ones, he's actually a very smart guy. He's actually very impressive in terms of where he is in his system. But despite all the time that he spent in the mentorship, despite all the time that he spent on the charts, despite all of this, there were still some very, very simple mistakes he was making. In a normal backtest that we were doing with him, even on a market like this, he would now look for his given entry here, because it began to set up. Now, before I even drop down, even for people that are brand new, you should be able to answer this. If I scale down to a lower time frame inside of, if I scale down to a lower time frame inside of here, just inside of this area here, do any of you believe that on a 15-minute, there is an ICI or an MB buy stop or any opportunity along the lines of any criteria you might have learned before, whether that be an imbalance fill, an OB, Wyckoff, a shooting star, anything, it doesn't matter, a supply and demand zone? Do you think that that would exist here? The answer is yes, okay? The answer is yes. Now the problem, okay, is that when you think in terms of that route, okay, okay, well, yeah, I mean, no shit. Okay, so maybe on a 5-minute, it's okay because it's such a low time frame. But if I maybe go to like a 20-minute or 30-minute, something along those lines, you know what? Okay, it's a bad example because it does deliver, but nonetheless, right? This setup itself, out of this buy stop, this MB, is very different from that exact same setup that happened right here. Despite these being the exact same setup, this is completely different because of where it is. This is why it's so vital that you begin to understand that context carries the entire market. And it's very important that when you start to actualize your system, you realize that just because you're showing up and the market is proving to have some kind of bullishness, even all the way up here, it doesn't matter. You need to be able to walk away and wait for that edge to deliver. Because the same person that then begins to trade here will also begin to trade where? Here, and here, and here, and here, and here, and here, and all of a sudden, you start to trade all the action in the market, and when you trade all the action in the market, your results become randomized or poor, right? So when we do this, every week we show up and we're like, okay, well, I'm waiting for this, or I'm waiting for this to happen. that wait for a certain thing to happen could be a week, could be a month, could be 2 months, right? It's not up to me. It's up to the market. All I know is what my system tells me. So when I'm looking long, I can no longer, for the life of me, continue trading long beyond, let's say, a proper stage 2 delivery. As a stage 2 starts, by this point, if I'm not positioned, do you think I'm trading on my given system any one of these days that are made up of 24-hour spans of new data every single day? The answer is no. I am on the sidelines. So I'm either in this market or I'm not. Now, again, it's a very different story if you're like a 1-minute trader, kind of like Alex says, but for instance, I can. That's perfectly fine, right? If you're on a much lower time frame, then I would say there may be opportunity in there for sure, because the daily now would be bullish, and maybe you trade a little bit of a lower time frame. So on a 4-hour, these right here might provide you ample opportunities on a lower time frame to trade, because these are now 4-hour MBs, which are going to be made up of, especially if you're on a 1 minute, right? So like a 4-hour divided by 60 or 6 minutes is like, I don't even know, like 15 minutes, right? So by that point, even by a 15-minute, of course there's opportunity here. And then you could scale this down into a deeper setup, right? You could go easily and say, do any of you think I can find a normal and good MB buy stops on the 1 minute inside of these areas here, all the way up, right? Anywhere inside of these areas here, on the way up, through all this nonsense. Okay? These are all going to be 1-minute opportunities, of course, and that's fine. You need to be aware of how the time frame that you're working with is consistent with what we call the EVC rule or the EVVC. I've started doing a lot more EVVC, which is kind of what I did before, but that's just having a few time frames that are somewhat linked together in terms of the rule of 6 or the rule of 60. Okay, where basically just to show it as an example, so people that are new can like pick up right off of it. If I'm entering a 10-minute chart, which is what I'm currently kind of doing, right? My validation time frame, which is a 6x multiple of this, is going to be about 60 minutes. Another 6x multiple of that puts me at about a day, and another, or 60x multiple of that, and another 6 to 6x multiple of that puts me at a week. So on average, my system at the moment kind of follows this path right now, where I'll kind of look at the weekly to see where I am. It doesn't even have to be like super bullish. It doesn't even have to be in a bullish range or anything, just about how it looks. Because oftentimes I find from a nice sideways move come very nice stage 2s. Then I'll look for the daily to go into accumulation, or be in a clear accumulation, or be kind of just under the MA or above the MAs, whatever it might be. 60-minute for the overall stage 1 and stage 2s, hopefully in an earlier one, especially like the daily, and then an execution on the 10-minute through basically an MB high at this point. So just buy stopping some kind of MB, which is really cool. And this goes directly in, just like Ole said, with the logic of the screener, where if you guys remember, the screener literally kind of tries to look at a few time frames, especially along the ones that you're trading. And at the moment, it looks like it's broken. So that's something we need to fix, because right now, yeah, it's broken. Very cool. So that is how we can take any system, any time frame, and systemize it into a proper approach to viewing the market. And then on top of that, how we can then take those same concepts that I might be using, where when I show up, I won't trade for any one of these days because it's not clear for me, where you guys might trade. But this becomes very important, because no matter what time frame of a trader you are, there are still going to be a lot of downtime, right? Even on a 1-minute chart, any given day, okay, your 1-minute opportunities might be inside of like here, here, and here. Beyond those points, you might call this market too extended and this market too unpredictable. So really, any given day, if you notice this, right, you have over 2,500 bars of nothing to do. Then you have some bars of something to do, and then you have another 1,300 bars of nothing to do. Don't think in time, start thinking in bars. So notice how the minute, if you're trading a 1-minute chart, still has a very high number of bars within which nothing occurs, or within which nothing will happen, or where you really shouldn't be doing anything. And similarly, if I apply that same thing to a weekly chart, it will be true. There are times where there were really good entries, really good entries, really good entries. Then it became too late. This is management. Then it became an obsolete market. Then it gave you entries, entries too late, obsolete, entries, entries too late. And again, prior to the good entries, the market spent about 1,000 bars, just like the 1 minute chart, doing nothing, and then spent another 1,000 to 500 bars, about 1,000 bars right here. Yep, about 1,000 bars doing nothing. Is there any difference between the 1,000 bars before and after that's been doing nothing in regards to a weekly chart versus a 1 minute chart? Is there any difference outside of time? There's not. It's the same move. But the problem, again, is if you've done all the work for yourself, if you've built out a beautiful system, you have all the data, everything's there, right? But you haven't started to actualize the system. You haven't started to see how the system operates. You haven't started to see the way that it actually works. What's going to happen when you go live? No matter what time frame you're on, what's going to happen? You're going to force trades that you're not meant to take. So does everybody understand along those lines why it's so important that if you've built up a system and it's proving to be profitable, that one of the most important things right now is to actually start to see those results in a liver environment, even if it's like a men funding competition. And again, this is by no means me telling you have to do men funding competition. It's not, you don't have to do that at all. But this is one of the best things you can do, because worst case scenario, you win an account or you learn something, right? Best case scenario, you get an account and then you get funded, and then, as a lot of you might know now, you can scale to 5 million off of that account for doing nothing except executing your system. Okay? It's also, yeah, very, very nice. We have 5 mil now available, okay? We're scaling good traders up. So your opportunity out here is insane now. If you can get yourself to a point where you do a version of this on a back test, and then you start to forward test and actualize a result or your results, and then you start to just apply those results, you're going to see yourself skyrocket infinitely, okay? So that is why it's so vital. And the more and more you get used to sitting out of trades or sitting out of shit markets, the better you become and the much faster and better you become, right? And most importantly, please, like, write it down, even set an alarm right now. Watch this video after. It is phenomenal in regards to this point. It will bring it home. You will see firsthand how you can build out a system for yourself. You can test that system, you can understand that system, and you can start getting funded literally like in a month from now, if you really wanted to. It doesn't have to be this daunting, hard thing. It's gonna be hard. You're gonna do a lot of work to get there. But it doesn't have to be as hard as a lot of us do make it out to be. Because once you have a system and the system has proven itself and you've started to do some form of actualization, you've done the work, right? This is what a lot of traders don't also get. You're much closer to the finish line or the prize or that funded account, that payout, than you think you are, which is a crazy thing to think about. That's really, really cool. But the first step is getting yourself to a point where you have something like this that you can fall back on and rely on. Because again, like, do you think when I show up to follow my rules now, given the fact that even this system over the last 4 months, this is just 4 months of actualized data, do you think when I show up every day now to execute my system, I'm worried about what the system may do in the coming days or the coming weeks or the coming months, when I have not only the back test, not only the forward test, but also the forward test the last 4 months, right? There's not a single part of me that sits there going, but this week might be different. But this week the markets have changed for the very last time. And now the world is flipped on its axes, right? There's not a single part of me that's ever going to think that way again. So get to work on doing this, right? It's absolutely vital. And it's huge, because once you've done it, that's it. You'll have to do nothing else. And then you can improve from there. Yonkler says, wait, you double the account size of profitable traders on men funding. Yup. Okay, I'm gonna do this really quick and then I will stop talking about men funding. From a 25K account or lower, doesn't matter. every single time you meet these rules, okay, we double your account up to 5 mil. We keep going. 100K to 200K to 400K to 800K to 1.6 mil to 3.2 mil to 5 mil. 25K to 50K to 100K to 200K to 400K to 800K to 1.6 mil to 3.2 mil to 5 mil. You need the skill. You can't do this without the actual skill, which is why the scaling plan was kind of built the way it is. But if you get the skill down and you even get a free account, yes, a free one through the competition, you can also get scaled, okay? You have an insane opportunity available at your fingertips, okay? So all you need to focus on right now, as I love to say, because the opportunity to do well for yourself is so high, the only thing you need to focus on right now is making sure you understand the skill, having a skill set you can fall back on, that you rely on, that you have confidence in, and start executing / actualizing it in some way. That's it. Okay, I'm gonna scroll up a bit here. I'm gonna scroll up a tiny bit here and go through some stuff. So hello, good morning, everybody. Really good to see everyone. Meant, how do we update the payment details? You'll find that in the invoice and stuff. I don't want to talk about that here. Namaste, what's up, man? Double-edged sword, yes, it is. How do you calculate the contract size with GUI trade? I check out the video there, but maybe me and Dan will release one on the Ment Funding channel to help you guys out with some position sizing. What's this little photo? Yeah, you got to make sure you select the right speaker so you can hear. Samuel says, I might have to do some helping here. Samuel says, my life sucks now. I can't wait no more. Losses, fuck my life. Sucks even more now. I definitely can't wait next trade. Okay, I don't know if he was joking or if he's having a mental breakdown, okay? I'm not 100% sure which one it is. But with the exclamation mark, I think you're all right. So forward testing is is an important point, but backtesting should still be the main priority. Yes. The first thing is always backtesting. You need data. You need something that has produced some form of EV. Forward testing with no EV is just stupidity, okay? And something really cool that you will learn in this video right here is a basic but profitable system that you can start kind of doing right now, where what I did with the guy in the video is I broke down a basic simple system. If you guys remember last week, what was an exercise that I did on a contextually bullish market? Do you guys remember what an exercise I did was? If we take gold, something that's super contextually bullish, and I delete everything, and all I told you was, okay guys, gold became bullish around this point, which it did. This is when we started following bullish. And I simply said, all right. I'll do it right now, actually, because I want this to really get across to you. Guys, with just a context that gold was a good context back in October, which is when we started to be very bullish on this because of the screener and the market, all we said was, you're going to set up longs higher than price through buy stops and stack them a little bit into the future. So all I did is I said, let's assume you buy here. If that one fails, you'll buy up here. If that fails, you'll buy up here. If that fails, you'll buy up here. And every single time you buy, you will simply protect and target 1 to 3. Okay? So that would be your buy. You'd let it fail. You'd set up a new buy. You'd let it tap you in. You'd let it come down. You'd set up a new buy at that next high. You'd wait. You'd wait. You'd get tapped in. You either let it fail or deliver now. It fails. You set up a new one. Sorry, here we go. You set up a new one right there. You get tapped in. It fails. You set up a new one. Same exact randomness. Nothing else but setting up longs at the lines that you drew because of the overall contextual bullish market. You wait. You get tapped. It fails. You set up a new long at that line with nothing else to do. If it fails beyond this, you can reset up a new one higher. You wait. You get tapped in. it delivers, you now wait for a little bit of failure down, you set up a new long right here, you wait, it taps you in, you wait, it goes. Okay, phenomenal. And now you have -1, +3, -1, -2, -3, +3, +3. And with nothing else except a bullish context and randomly stacking lines higher and entering off of failure, are you profitable as a trader or not? I'll just start there. You are. Now, this is also something that you will see in this video here, which is why it's so important. But what is the one thing, the one rule? And now for people that actually saw the video, don't say it. But what is the one rule that you can pull from this as an understanding in terms of patterns, in terms of entries, and in terms of context? The people that have not seen the one-on-one yet, what kind of lesson do you think you can pull out from that? I'm just wondering if where your mind goes when you see this. Okay, perfect. Yeah, Roberto, exactly. Trade good context. But most importantly, how much in this scenario here does the pattern that we use to enter matter? Did it matter by 70%, 80%, or did it matter 0%? Yep, 0. In this scenario here, all we did was what? We bought a line that was higher up than the previous line within a bullish context. So the question that I posed to this member here, and that I'll pose to all of you, is if we can make positive EV, so positive return, on a system where we throw darts, like you see here, at a bad context, at a good context, just randomly, do you think that refining the areas within which we might enter would produce potentially better results or now worse, and that we should be terrified? It should produce better, which is why we refine, right? And when we refine and we start missing moves, is that something that we should now worry or be afraid about, or is it something that we should respect and understand as part of the system, right? And that's where that comes from. So what I did for the guy, and you will see this all, is I said, let's break down some of the things we could have done here to prevent losses or actually to get better entries. And we studied what created moves. Instead of randomly placing longs, we went inside and said, okay, what happened for a move to become clear? Well, prices would make a bullish MB or get above the MAs and start moving higher. And then from there, EVC, you might scale back down and further down to an hourly. And all you would do, what I taught this guy to do, is wait for a very large MB and buy stop it. That's what I told him to do. I didn't tell him to look for the special ICI. I didn't tell him to look for a perfect flush out or anything like that. I said, when that meets your criteria, look for a large box to buy stop. Is this a large box? That's it. That's all I told him to do. I told him to buy stop the high of the box, protect the low of the box. This is an MB buy stop. This is what it looks like. This is what I did to refine my system. And buy stop it. And wait for your entry. That's it. I'm buy stopping an MB. Okay? You're in. If I want to enter again, I will wait for another large MB, at least the size of this. Let's wait for something around that. It goes. It goes. Nothing for me to do. Okay. Well, I think it wasn't long enough. And then price takes off. And the context of the higher time frame has now shifted. It went from being in this context to one that's moving. So if I now waited for a flush out or a move back down on a 4 hour, it should produce another opportunity on a 1 hour. So if I let it come down, and now I look at an hourly, and I can find a large box, Can I buy stop it with a stop under the low and look to take it higher? Yes, that's an MB buy stop. That's as simple as your system could start with. This is it. I'm doing nothing more than buy stopping MBs now. Okay? Price comes down. Maybe you can buy stop even this MB in here now, right? You have like this little one building up here. So there you go. If you missed this trade, what is it building right now, guys? Is this a clear, large MB that I can buy stop? What's it building right here, guys? If you missed all of these trades. So with just simplifying my entry to a buy stop of a big box, have I improved the overall EV or have I ruined it and made it super complex? I've improved my EV. Right? So now you're seeing firsthand that you don't have to be a genius and do all this crazy stuff that you might see me do or another member do to get the perfect entry that they might want to have a system that's profitable. Now, when you're trading markets that don't end up delivering like this, are you going to take as many easy wins or are you going to take more scratches, losses, and break-evens? Of course, you're going to take more scratches, losses, and break-evens, or losses and break-evens. Of course, you will. But I want to ask everyone here, do you think that if you executed this kind of system where you buy stopped a large MB or a large demand formation in an overall contextually bullish market, and you just targeted 1 to 3 or 1 to 5, do you think that system has a positive EV over months? It does. And to kind of follow up with that, if you've taken at least 500 back-tested examples, pictures of this, do you think it's a system that you can now use to get funded for yourself? And how long do you think it could take you to get 500 trades back-tested? Probably less than 2 to 3 weeks. Based on who you are, maybe longer, maybe less. But yes. So all of you should begin to see that if the concept or the understanding is there, okay, then really your curve of learning can be cut a lot shorter than you actually thought it was. And I want to follow up this entire talk right now with all of you and say, based on just the talk we had just now and based on the examples I've shown you right here today, do you feel that your own understanding of how long it might take you has actually been shortened in itself in terms of what it can look like for you right now in terms of what you can do to where you can start getting funded and start getting paid out and start getting even a small form of positive EV? Okay, perfect. That's all I want. Because the second you start to understand that, the faster you begin to do the shit that actually matters, collecting the data, the faster you get used to stuff like this, the more data of it you have, the faster you actualize it and get your accounts, right? Funded accounts or personal accounts. This is all it really takes. And what's cool is, I went through an example like this with that client on the recent UJ chart. And we went through the example that we provided and we said, hey, based on what's happening now, what would you say? And we went through the steps that we laid out. It flushed out like we expected. Then the 4 hour did what we wanted it to do. It started to go under the 2 and started breaking higher. And we said around here would be your entries on the hourly. Would this be a valid trade last week using the system we just taught? That's it. And then if this week price does this, is that a valid buy using the system we just learned about together, all of us? Yes, it is. So just like that, you have an upcoming prediction / outlook on the coming week because it's began to move the way that you were looking for it to move. And guess what? everything lines up, right? You have lineup across the board. That's it. And you will see us talk about this because we started going through the examples. We started saying, okay, the best times we seem to find trades is after a flush out. So what me and the client did is we said, let's look at the trade, let's look at the market after a flush out. And we looked in here. Let's look at the market after a flush out. And we looked in here. Let's look at a market after a flush out, after a flush out, after a flush out, after a flush out. Guys, I'm going to show you something absolutely insane right now as we're all sitting here over the span of 2 seconds. And all of you can tell me if you think this could lead to you getting your first 100K, 1 mil in funding. Ready? These were all the flush outs. The 4 hour, remember what I said, on the 4 hour, we're going to get above the 200 and then come back to the 50. So above the 200 happens right here, here, and then onto the 50 happened here. I'm going to draw boxes there. That's one area that happened. Then we waited. Look at all this time we waited, flush down. Does it ever go above the 200 here? Yes or no? This is the 200, this line, this gray line. It doesn't. I wait. Here's where you start watching. Here's where you start watching. This is the first time it comes to the 50. And that's all that matters. Then it flushes out again. Comes under the 200. Comes up over. Whoops. Comes up over. Touches the 50 here. Then takes off. We ignore it. It flushes out again. This was last week. What does it do? It comes over the 200. Then it fails again. So, as a lot of you might know, what happened last week? What did I say I would do last week on UJ? Does anyone remember? I would sit out. Yep, exactly, John. And does, even based on this simple drawing the boxes of what happened, price comes over the 200, takes off, comes to the 50, takes off. Do you see why I stood and stayed away from it based on what happened here? Price took off over the 200. Did it come back to the 50 or did it flush back out randomly? It flushed back out. So I ignored price. Then it took off again. I ignored it. And what did it do? It flushed out after a move under the 200. So what do? Back over. We can trade it here. And if price comes to the 50 after a move, can I trade it inside of here? Yes. So now I have an opportunity or an approach to the following week. Can anyone here, even if you're a beginner, so this is mainly for the beginners. If you're a beginner, just based on the fact that we saw a move down on a higher time frame and then a lower time frame move above the 200 and then a touch on the 50, does everyone understand why my prediction or directional bias on a week or expectation on a week could be something like this? Even if you're new, and don't lie, don't be like, yes. If you don't understand, feel free to tell me that you don't understand, because you will learn, and that's fine. But I want to see where your brains are if you are brand new. So Sosa says no. Okay, that's fine. Sorel doesn't, no problem. Ole does, but Ole is an old member, so that doesn't really count. Okay, so let's try and do a little bit of further work for Sosa and Sorel really quickly, okay? Oh, Sosa just got here. Okay, I'm ignoring his no then. And Sorel, did you also just get here or were you here the whole time? Bro, why are you, by the way, Sosa, why are you answering no when you haven't even been here, bro? Come on. You're better than this. Don't show up late and then say you don't get it. Okay, Sorel has been here the whole time, at least. So we'll go with Sorel. So Sorel, the point right now is to try to get this across to you then, okay? What me and this member noticed, you saw here halftime. Okay, so Sorel, what me and this member noticed, before we even continue, this goes directly to Sorel, is when there's a bullish market, before we even look at anything, do you understand that by simply placing longs, okay, with a 1 to 3 RR reward, just longs randomly, we can get positive EV out of the market? Did that part make sense to you? Where if market's bullish, and you simply, okay, cool, so you understood that. Okay, great. Now, the next step of that is if we don't want to randomize our results completely, or we want to improve the EV, something that we can do is we can start going into price, right? And we can start looking at the fundamentals that create potentially larger moves. So something that me and the member noticed is that large moves tended to come after larger on a higher time frame, so context time frame, in this case the daily time frame, flush outs. A flush where price breaks down beyond what it was breaking down before, or makes a big move and breaks down heavily into some larger MAs. So do you understand how the parts that I've circled here indicate flush outs of this market? These are opportunities for new potential continuations through the tops with no guarantee of them coming. Do you understand that these daily circles are representations of that? These are flush outs. Okay, beautiful. So we got that far. And then something we noticed as we stepped down to a validation time frame, which is simply looking at a 24-hour, right? So 24 hours is a day. We divided it by 6, which is the rule of 6, which is a 4-hour. So when we stepped down to a 4-hour and looked at the action inside of each one of these areas, what we noticed is every time price would flush out below a 200, and once it reclaims the 200, which has come above it, it produces opportunity, potentially on a lower time frame for a move. So what I'm doing now is I'm circling the initial points that price reaches back up over a 200, that price reaches back over a 200 to get a move, before we even look at this one. So do you understand these boxes here as they simply indicate price on a validation time frame reaching above a 200? Does that make sense to you? After a flush out. Okay, so comparatively, before I even move on to the next box, do you understand how in this same flush out, these points right here meet the exact same requirements? Price flushed out and reached above the 200. That's above this area. This is above that area. Do you understand how these are the exact same as the part on the left? Okay, do you understand how this part here is exactly the same as all those other parts on the left? This is the first time price reaches above that gray 200. Good? Beautiful. Now something else that me and this member noticed is that after reaching above and beyond the 200, so pushing higher, this is institutional structure. After reaching higher, price would then tend to, on the validation time frame, pull back to the blue 50 EMA. And at that pullback would be another opportunity to now scale in on a lower time frame. So do you now understand how the box here from this low, due to the fact that it pulled back after a move to the 50, is another potential opportunity on a lower time frame for a continuation due to the fact that we noticed that? Not you, Ole. I know you know, Ole. I'm asking Sorel, though. Okay, good. So, Sorel, similarly, after this flushed out, and we have the 2 that got above the 200, and then price pushed bullish and pulled back to the 50, do you understand why this is another one of those areas to continue looking for those continuations off of a lower time frame to go long? Okay. Do you understand how after this flush out and price reached over the 200 and then pushed bullish and then fell back to the blue 50, this would be one of those same opportunities after a flush, move higher, 50, to get another position long? Sorel is for you. Okay, perfect. Now, do you understand why? When I drew this just now, why this first box over the 200 meets the criteria of the others, where it flushed out and moved over the 200. That's the initial step. Do you understand why this meets that area? Sorel. Sorel's doing a lot of typing. He's like, fuck, yes. Okay. Now, do you understand why at this point, I said it's not the same, since after a move that was not institutionally bullish, okay, it didn't stop at the 50. It continued to fall down and reflushed out. So do you understand why this point here is different from these initial touches of the 50 after a move? Do you understand how those are different? And that, so he said yes, by the way, for anyone not looking at the chat. And that is exactly why I did not want to watch price in that week. Now, Sorel, after this flushed out, after a new move, and price reached above the 200, do you understand why in here, using again that same 200 rule, this is a good area to scale down on a lower time frame to look for a trade? I need a yes, and then I have one more question for you, Sorel, if you give me the yes for this one. Okay, and the last question, Sorel, is now if price moves higher, as we expect after a flush and a move over the 200, and then goes sideways at the blue 50, do you understand why this is the same as that and every other 50 EMA move back to that we saw before? So, are you still confused? We did it. Okay, 2 people have been cured. That's beautiful. And maybe others that were listening, but phenomenal. So that means, okay, that all of those areas provide ample opportunity based on those rules. Okay, so now, like I said, in a few seconds, I now want to show you guys why with a little bit of work, a good amount of backtested trades, you all can finally start looking at the screener plus a market and potentially get funded using a relatively simple system. So let's go to all these areas, but now on the hourly, because now we know the areas where we would go to a lower time frame to trade. Let's take a look what happened. So I'm going to go quicker now, and what I'm going to do is I'm going to draw the MBs that we could buy stop with just a tool, okay? So this was the first flush out, okay? Price moves higher. We could have buy stopped this entire MB. Did price ever validate that MB? No, we would have ignored it, okay? It's as simple as that. Price gets back above, no long-term MB, we wait, and then long-term MB. Is this a valid 1 hour MB buy stop, where we buy stop basically the demand of the overall price? Sorel and Sosa, this one's for you. Sosa says yes, and Sorel, the man, the myth, the legend, repeat please. Okay, again, remember, these are the areas that we saw in that 4 hour. And what I noticed is without anything else, no ICI, no craziness, we buy stop a large demand creation, a large MB. So what we did is we waited for price to go sideways, and we buy stop the MB, and we put our stop loss under the bottom of it. No inside little 1, 2 perfect stop, just boom. The biggest MB we can see on this time frame, we buy stop, stop under. Understood? Good. Now, Sorel and Sosa, is this an improvement from the random dart that we were throwing before? Yep. And that is why we go through refinement. Because we could throw a dart, and we could on average probably pull 1 RR to 2 RR out of the market every single month. Great, we could do that. Or we could improve the way that we throw the dart. We could improve the way we look at some context. And we could improve overall the RR that we expect every single month or every single year. That's all we're doing. Okay, so that's an example of an entry. Then we wait. Now, is this a buy stoppable MB? Yes or no? Not in terms of every rule, just is this an MB that you could have buy stopped? Yes or no? It is, good. But is it an MB that we could have buy stopped given our EVC rules of the daily and the 4 hour? The answer is no. So Sosa says I have to see the daily, but remember what we just did, Sosa. What was the thing we just did? We drew out all the daily flushes. So we know this is after the initial daily flush. And we drew the boxes around the 4 hour criteria met. So this is not a tradable trade. This is the only trade we would have taken. Now we wait. Price flushes out. Price goes sideways. Now we wait for a large MB to buy stop, okay? This can be a buy stoppable 1 hour MB. That's happening in the area that we suspected. can you buy stop the high with a stop under the overall low and look to take it higher? Is that a valid MB buy stop? Okay. Then we can keep waiting. We wait. Now, as it keeps going sideways, if you didn't take this, would this be a buyable MB buy stop? Yep. But we took a trade, so we'll ignore it. Then it goes. Now, remember, here's that 4-hour gray box. So, can I buy stop this MB here? Yep. Because now it's meeting the rules of our 4-hour and our daily. So we wait. Now, as it becomes more pronounced, can I make this MB into this one? Yep. Now, as it becomes more pronounced, I mean, nothing really to do. I'm just increasing the stop. There we go. And we get tapped in. Okay. Now, can I buy stop this MB? Perfect. I can't. Because we're late to the party. Exactly, Sosa. We're late to the party. The move, based on what we've tested, came and has delivered now. This is where we go to the sidelines because what's likely for this market now? To either do one of two things. What is it? To take off or to flush and chop around. Exactly. So we wait. And then it flushes. But upon flushing, we get into a new 4-hour. Now I don't have an MB to buy stop yet, so I have to wait for sideways. I have to wait. I have to wait. I have to wait till we now hit the 4-hour 50. We start hitting the 4-hour 50 here. Can I buy stop this MB? Yup. Then it flushes again. Then the failure flush comes, and now we flushed out. Can I buy stop this MB? Can any one of you, do you think, get funded using a system like this if you simply were patient and waited for your given context, market, and then opportunities? So Elton says, I'm lost. What specific MB are we looking for? That's the thing. The specific MB is the one that's coming from the overall connection of every time frame here, where the daily has flushed, the 4-hour has gotten over the 200 or taken off over the 200 and pulled back to the 50, and then the 1-hour, another EVC criteria, you would simply buy stop sideways MB. That's it. That's the specific one you're buy stopping, Elton. There's not a secret little formula for the MB, which is perfectly aligned for the... No, it's price has done an overall thing, has proven to be moving to one side, has proven to have this move happen, has proven to do it before, so we enter the buy stop of the MB. Do you understand that, Elton? Now again, as we take a look at this now, okay, that was about, just so you guys know, this was about 300 days of price action. If you traded a system that dealt with using a 1-hour chart to enter, a 4-hour chart to validate, a one-day chart for context, you would be on average on this looking for about 309 days for the 1, 2, 3, 4, 5 trades. So Elton, you can look back at this after and then also watch this one-on-one right here, okay? Because it's not all meant to come in one go, but what I'm simply doing is I'm buy stopping overall demand as a form of going sideways. That's it. Not a specific MB with a specific clear rule, but simply the fact that the daily flushed, the 4-hour came under the 200 and reclaimed it, then took off and came to the 50, and a lower time frame produced the buy stoppable range, or MB. That's it. That's the overall rule set for this specific system. And then target, let's say 1 to 3. So 3 RR made, 3 RR made, 3, 6, 3 RR made, 3, 6, 9, 3 RR made, 3, 6, 9, 12, and this one would be active right now. So there you go. You made 9%, or if you risk 2%, you made 18%, or if you risk 0.5%, you made 4.5%, however you want to view it. You made 9R. Now again, it's not a shit ton of money or a lot of RR over this space of just this one asset over this amount of time. But again, do not think in very limiting terms. Your scaling, theoretically, is now available to $5 million. Okay? Let's even call it 2 mil, even though you can get to 5 mil. If you make 9R on 2 mil, let's even say at 0.5% of risk, not even 1, and you did 9R, and you did it in 300 days. This is already higher than the median household income in the United States. Now, for a lot of you, that might not be a number you might like. It might be like, but there's no losses there, and you're right about that. But you need to recognize that just with the system provided, or kind of the system shown right here, right now, with not on a lower time frame, but on a higher time frame, something that theoretically you could do, even with a job, a 9-to-5 job, because it's looking at a higher, you know, you're looking at producing some really above average returns. And then if you're looking at this on a 5 mil account, well, you know, then you're starting to understand how this game is played, how scaling works in the trading industry, how the skill set rewards you just for simply redoing and repeating the same exact thing. That's how it happens, right? Jesus says buy stopping indicator MB would make it even easier. You could do that, but I do it through eyes. The unique approach to the eyes is always going to be better than any indicator in the world. You need to get used to starting to see price for doing something rather than relying on something else. You need to get used to just relying on yourself to see stuff, right? It's very vital. You know, the MB that you buy stop might not be the same as mine, right? Some of you, if you're looking at this, might be like, I don't like it. I'll wait for price to go sideways like this, and then I'll buy stop here if it does that, right? But then you might miss the move for doing that, but that's okay, because that might be the MB you want to buy stop, and that's fine. There's nothing wrong with that. And again, all I did is I buy stopped MBs over and over and over again. Just overall sideways action. Now, are there ways that I could have refined this if I wanted to further and go inside and say something like, hey, instead of trading the entry of an MB, I'll let it flush out, and then I'll buy stop a smaller MB inside of price. Welcome to what some people do over time in their refinement. Welcome to how refinements are made. Notice that the entry criteria is not the thing limiting you, right? The entry criteria is simply refining the potential entry, the potential risk aversion, the potential max drawdown that you might experience, and maybe making it better on the RR upside so that when you execute the same rule over and over again, you actually create higher returns over time. That's all it is. That's what a refinement will look like over time. When are you releasing the tax evasion course? Yeah, that's funny, bro. Pay your taxes. That's the best course you can get on taxes, okay? I'm going to scroll up a bit here and kind of go over a few things, just make sure everyone kind of is on board, understand what's going on. But yes, I do highly recommend, especially to the people still a little bit confused by this. One, if you haven't seen everything in the team or the recent 10 to 20 webinars, that's your starting point. And then to check out this guy right here, even after this, because you will get this. It will make sense, but I want to show you firsthand that, like, well, basically what's possible, right? What's available to you. So scrolling up a bit here, just going to read through a few things here as I can. I'm going to go a little quickly if I can. Christian says, that's me. Profitable up to 1,700 trades back test, crazy curve. But getting used to forward live testing and not having FOMO to bad entries running without me. Exactly, right? You can get a lot of entries back tested. And once that's there, you need to start putting it to work, which is why, again, I'm kind of reminding you guys, and I do recommend it, sign up for this competition. It's completely free. Just start kind of showing up and doing your thing, even if it's on an hourly, even if it's a system like this one, right? Throw on if this is your system, get on the competition, throw on this setup, right? Even like this week is fine. There, throw it on and see over the coming weeks how it plays out. Start getting used to the actual forward test of the thing that you've tested or the thing that you've collected data on, right? Because now you have an expectation and understanding of how markets move. At least the starting one, which is very powerful. Jesus says, I don't know how the SMC kids get away with trading shit context unless they're all capping about wins. Usually it's just randomness. A lot of randomness can create some results, but oftentimes when you're looking at every single zone, which is what they do, when you show up every single day basically going, and then on the bottom side, same thing. You're bound to get one of them right. And then, it's just that game, back and forth. But yeah, listen, you might be able to find consistency with it. I found that it might breed some consistency on a much lower time frame. So if that's something that floats your boat, then good. But remember, the changes I've made in my own trading have come for a reason, right? They've come because I've not only simplified my process, but started to understand how markets actually function. And when you start understanding how markets function, you kind of can't go back, right? The more and more I got into trends, the more I understood, holy shit, the stuff that I was doing was literally just almost random. But the only reason I made money was because I had really solid management, right? That's all it came from. And that can be true for a lot of systems too, though. So Dan says 95% of trades that you take outside of your plan will fail. Yep. Exactly. Samuel says, I'm hella tired of taking those trades anyway. So much more in the mood to be making more for doing a lot less. Exactly. Doc says, I just watched it and it was huge for me. Yep. This is going to be a very important video for a lot of people, especially after this one here. Because this is the exact system that me and the member kind of went over, where we understood that if you throw a dart, you make money because of context. Let's improve the way we find those opportunities instead of throwing the dart. Because that's really how we think, right? Like, if you really want to think about it, can any of you guess Warren Buffett's investment strategy? Like, really think about it for a second. What does he do? Can any of you decide, like, think about it. You guys want the truth? I'm going to show you the biggest truth ever. John got it. He throws darts at good contexts. That's it. We'll go to a monthly chart. He's on a monthly chart. He looks at all the quote-unquote fundamentals, okay? He sees the fundamentals of this company are generally good, or the overall models are bullish. What does he do after a pullback? He sets up points to buy the market through a dart toss due to the fact that it has a good context and allows it to do its thing. And as he does his thing, he then holds onto the full position of multi-billions of dollars and makes hundreds of millions, if not billions, for doing it. He's literally looking at a good context and throwing a dart at it and holding it until the context is no longer good or until he makes money. Now, as a trader, we don't have that kind of money. We don't have that kind of capital, nor do we have that fucking kind of time. Okay? So instead, we could throw darts if we want on a lower time frame and get some RR, Or we could improve the ways that we view the market, the ways that we get involved in the market, the executions and the entries that we use or confirmations we use to get in and permanently improve our bottom line. Where was I? There we are. Amazing video. Planning to watch it tomorrow. Thank you guys. I appreciate that. Good. Yeah, there's a ton to learn from it. I do suggest that everyone checks it out after this. Christian says, I feel like that waiting for the right thing you want to happen is the make or break for your system. Can have the best system ever, but if you're trading everything you see, large drawdowns was come. Yep. Big Al says, lots of prop firms have time restrictions and resets that promote trading outside of the system. Another reason to have a good look at men funding. Sure. Ole says, yeah, I did that too recently with the logic to have the screen or higher time frame in mind. Good. Is the EVVC only for the EMA ICI system or SSC systems too? It's everything. Wouldn't a weekly be too far disconnected from a 10-minute? Nope, because it's not a weekly. It's a weekly and a daily and an hourly and the 10-minute. If my weekly's in a little stage one, and a little stage one, and a little stage one, I know the daily's going to start setting up good stage 1s and 2s, and create a delivery. If I know the dailies are going to do that, out of those exact stage 1s and 2s that we traded, I know the hourly is going to follow within that action. And I know on the hourly, when that happens, it's going to produce decent 1s and 2s until it takes off, and then I can't trade anymore. So I know on the hourly, I'll be trading in the 1s and 2s and 1s and 2s, trading that higher, 1s and 2s and 1s and 2s and 1s and 2s, letting it go higher, until it resets again. And within those moments, I know I'm going to get a little bit of stuff that I'm testing right now. So this will be taught in Mastery course as well. Well, I've been testing for a year and a quarter. But nonetheless, within here, just going through MBs, right? The 10 minutes going to create those buy stoppable MBs. Whether it be the large ones, where you buy stop the overall MB, like I just taught you, or where you start refining into executing a mini ICI or an MB or a smaller one inside, and then you get delivery. This is where that comes from. That's all it is, right? So no, the 10-minute is not far enough disconnected because it goes directly into what I look for. Because I know when the weekly is in a mini stage 1, the daily's in a deeper stage 1 or a good stage 1, the hourly's going through a cycle of 1s and 2s and 1s and 2s and early ones, and the 10 minutes going to set up beautifully with the institutional pushes within that, and that's where I want to be in the market. That's it. And again, how did I do that? I used my EVVC rules. I tested those rules. I showed up to the market and I executed those trades and I managed them. And then from those trades come insane deliveries, right? From those trades come insane, as you remember, deliveries, right? That's where it all comes from. Jaden says, I noticed this in my testing. Out of 100 trades, all of the big runners had a higher time frame above context, also in a good spot. Exactly. No mentor out there using all the time frames like men. I have not seen people teach like this, yes. And that is also why we are the only place with a software that actually does this and that we're working on creating basically from the ground up, because nothing else does anything along these lines. So we have to create it from scratch, from the ground up. Alex says, but again, because Anton is on 1 day and I trade 1 minute, I translate his 1 day into my 1 hour. Exactly. Yep. And if you're on a 1 hour, right, if I can have a year of no context, that could be the equivalent of 3 months, 2 months, 1 month of no context on an hourly, right? And sometimes even longer. There's some markets, as you guys know, that can spend 10 years doing nothing. Those are markets I won't touch. I don't care. What would the EVVC be for a 1 minute time frame entry? Go through it, dude. 1 minute, 6 minute, 36 minute, or 1 hour, or 30 minute. Depends on you, how you like to do that. X that by 60 hours, or 3 day, or a weekly, just depending on what works best for your kind of system. Go through the rules. 6x, 6x, 60x. Or 10x after, because you multiply this way. 60 times this. Oh wait, sorry. 1 minute times the 60 would be an hour. 36, 360 minutes, which puts you at, what is that? I don't know, like 5 hours? 4 hours, 5 hours. You could even use it daily, honestly, it doesn't matter. Again, just go through the math, start calculating a few of those time frames, takes a few photos of them, get used to the ones that make the most sense to you, and then use a few, but use those as the main ones. Of course, thanks, G. All right, you guys are defining G, all good. Dan says men funding is better than anything else out there. All right, I appreciate it. Yonkler says, wait, you double your account? Yep. Keep going, guys. This is a great place to be. Just passed my evaluation. Good for you, man. Congratulations. Why do some nerds think that a strategy will randomly stop working if it has proven positive EV? Okay, well, I don't know why you have to embed the nerds in there, but okay. But the reason people do that is because they either A, have not started to actualize their system, or B, have not actually collected the data to have the confidence to look at it and say, yeah, this is positive EV. That's it. Nico says, I thought you could scale to infinite with men funding. You can. We scale you by doubling your account and what you can have in your account. You scale by compounding your account. You can trade your account up to anything, but the max we're gonna provide you is 5 mil. You can scale it to 50 mil. I don't give a shit. You can do whatever you want. Hey, Anton, I joined the mentorship 2 to 3 days ago. That's amazing. And I started going through the content in this sequence, section 1, 2, 3. I would start with, oh, you went through the wiring. That's good. The most important thing is the wiring, and then basically the recent 10 to 20 webinars. That's kind of like the best way you want to think about it. And then from there, you're kind of free to pick and choose as you will, right? And 100 onwards is really good. But right now, the mastery section is literally just on the cusp of being perfect. And I'm going to record that and put it out to everyone soon. And just so you know, I see you're asking if you're in the right sequence. The reality is the fact that you're showing up and looking basically already from webinar 100 onwards and going through them, as well as what I can see from your message, you're going through basically the psychology in webinar 1 to 100, because psychology is something that is taught and sprinkled throughout everything. You're in a really good spot. You're going to be chilling. Yeah, just make sure you kind of start showing up to these. It's just really good to see where we are, where you're heading, and just to get a good bit of nuggets here and there for your upcoming like price action weeks, thought process, everything that comes with it. Is there any difference when trading futures versus stocks regarding spreads and commissions? Yeah, technically. There's always differences, right? Commissions per lot are calculated probably differently for futures and stocks. What's the best platform to use on men funding? It's up to you, really. DXTrade is nice. MatchTrader is pretty good too. I think the competitions are through MatchTrader, so if you want it all to be in one spot, MatchTrader probably is the easiest one to use. Daniel posts something. Yeah, I mean, so like, here's the thing. When I see this, right, all I'm thinking to myself is this person better be doing some version of actualization, right? Because like, you know this is an edge, right? This will not randomly, I mean, 125 trades, okay, maybe give it like up to 300 if this is a back test. But like, you know this randomly is not going to do this. Famous last words, go knock on wood right now. But you know it's not randomly going to do that. But nonetheless, like there's clearly some edge in regards to what you're doing here, right? It exists. And I mean, this speaks for itself. You have clear management, a really good management, right? So it's really important you start to actualize the results here. you know, go get on this thing. You should be actualizing those for sure. Youngler says, how do you go on about selecting and finding stocks to trade? Blah, 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 blah. At the moment, just random and manual, which is why I only have a few, and I barely even trade them. Like, I've had Netflix on here forever. I've had Nvidia on here forever. I've had GBTC on here forever, and then some other ones that people have mentioned. But the main goal right now is I'm trying to get it all into a screener that can also show the percent change over like weeks and months and stuff like that. So it's very easy to look at a few things that are performing well. And that's how I'll be doing it. It's not available right now though. There's a very small beta version of it. And even I don't really use it that much because there's a lot of work to be done there. So at the moment, I don't have really a crazy process for that, which is why I could be trading a lot more, but I'm not, right? Roberto says, a dumb question. Never a dumb question, sometimes. What's the difference between backtesting and forward testing? Backtesting is when you collect the data. You go back and you look at prior action and you literally collect the data on that action, whether you do it through replay mode or not. And you collect all the opportunities that might have been available for your system. You go through the exact same things you just saw me do, right? You go on a daily, let's say, and you say, hey, if I wanted to trade Bitcoin, where could I do it? Well, there was a move and then a flush here and then a flush here. So on a 4 hour, it should have gone under the 200, which it never did, and then given me a trade. So there's nothing to do on a 4 hour here. So you'd wait. Yeah, so honestly, on a 4 hour, you wouldn't have had a trade based on the things that we just went over. Yeah, there's just nothing here for that potential trade in this case. But if it was something like on an hourly, and you waited for it to come under the 200, then if you're trading a lower time from like a 15-minute, you'd start looking here for an MB, then it fails, then it gets over the 200, you start looking here for an MB, then it fails, then it comes over the 200 and you start looking here for an MB, and then it takes off, and the first time it comes to the 50, you start watching again for an MB. So here, if you were on a 15-minute, right, the opportunities would be to do nothing, to then buy stop likely this MB, right, big sideways range, you buy stop the range, stop under the low, look to take it higher, you wait, no range yet, right? Enters this, now you wait for like an MB range, you can see it kind of starts a nice MB range. So again, you can buy stop the MB range, stop under the low, look to take it higher, right? Take your loss, maybe you re-buy stop it because it's still a very clear MB. Yeah, and now you'd be like in this trade right here, if that was your system, right? So like, and you'd be in this trade as well. So you'd be in both of these trades right here. So that would be your system, for instance, right? Based on that mini system we spoke about earlier today. And you can see you can apply those same rules across the board, which is really cool. Context is overpowered if you just enter with trend and don't trade counter trend. Yep. Yep, exactly. You refine to reduce loss while simultaneously giving up potentially missing moves. Yep. Have you got a new rule for MBs, or is it just subjective? What do you mean by that? MBs have always been the same thing from the very beginning. They're a large formation of demand, right? That's all they've ever been. I've then created rules around what I would call, it's quote unquote real MBs. That's what the structure indicator is indicating. That's that back and forth of supply and demand. But at the same time, within that exists the formation of the same MBs that have always formed and been created. Within those are mini MBs or fractalized MBs, as I've always taught. Nothing like that has ever changed. There's fractalized MBs throughout all this action. So I'm not 100% sure what you mean by that. So no, I do not have new rules for MBs. I just have an understanding of MBs that you have to apply based on the scenario that you're in or the system that you trade. Samuel says 2 weeks is possible in Go mode. Exactly. I mean, so it depends on what your schedule and life looks like. Because, you know, I don't want to sit here and be like, just go do it. It's super easy because people have commitments, responsibilities, jobs, families, random events that happen in their lives, etc. So it's not like a question of, oh, go do this in a month and you'll be fine. It can take time, and that's fine. But the faster you start getting started at it, the faster you start to put the stuff in, and the more time that you do have available, the quicker you realize that you're actually able to do all of this and start trading an actual system, even if it's a slower EV system at the start, of course. Yeah, sure. I mean, yeah. John says, meant quick question. The only times we suppose to trade MBs are in trending stage, not accumulation. Thanks for your response. What do you mean by that? It depends completely, because a trending stage on a higher time frame might be an accumulation, or stage 1 on a lower time frame. An entry of this MB buy stop right here could be the equivalent of a accumulation while it's clearly trending across all time frames. So not quite sure exactly how to answer that myself. Okay, and then we had Sorel and Sosa understand all this. And Sosa said, when you get a flush, just buy stop an MB when the 200 MA go under. Rewatch the webinar after, and then check out the one-on-one. And then you'll be chilling. Shelling says, we can create a rule with the trigger directional candle, 200 MA, and buy the next ICI that touches the 50. Yep, you could do something like that, sure. I mean, I would do some testing with that for sure. But yeah, you theoretically could do something along those lines. You could set up a directional candle for just a 200 and only focus on trading when you get an alert for one of these green guys, right? And start watching those lower time frames. Because as you might know, the biggest moves will come from, right? I mean, if you just look at this green candle off of that, or this one, right? From those came those moves. And then the first touch of the 50, if you want to make it then a 50, right? First move to the 50, the same thing happened, right? If you notice the green bars, those are the ones that created the move, right? And those could all be scenarios, as you saw me kind of do before, where you could step down and start looking at a lower time frame based on the time frames you trade for your given new stage 1s and 2s, for your MB buy stops, your Wyckoff buy stops, accumulation buy stops, however you want to call them, FMBs, further refinements, etc. So best place to buy stop an MB is when price is above 200 and close to the 50. I would test, but that's not what I'm trying to get at with this. Yeah, so Emilius kind of said it. He said, don't fit this into a pattern like that. Instead, mark the trades that work out for you, that you backtest and see how the MAs interacted. Exactly. You don't want to sit there and be like, touch the MA, then it came above the MA, so now it's a buy. Because that's not what creates a buy. That's never what's created a good opportunity. What creates good opportunities is the context behind that market. So if you study what creates a good move or what starts good moves, and then look for those moves to repeat themselves, then you're going to do a lot better for yourself. And this goes hand in hand with something I saw this week, which is right here. I said it was a genius way to not let the market play tricks on you. So what Capo said is, he says, I literally have a screenshot of a clean market fractal on a mouse hotkey that I always paste into TradingView when I hesitate. So what that means is, what he does is he literally goes and finds an example of a trade that he would take. So for instance, right, when the 4 hour was here, he will literally say something like, okay, this is what the 4 hour tends to look like after a big move. So actually I'll do it like this. After a big move, for me to get a good trade, and then inside of that, for me to further get a good trade, the hourly actual setup, if I was to buy stop like an MB, tends to look like this, or like this, or like this. And he would say, okay, those are the times I buy stop, and that's what the hourly has to look like. So in the future, when he's on a market and he's looking at it and he's confused by it, and he's like, is this kind of like the thing that I'm used to? Oh, but maybe because it's going higher, maybe it is. All he has to do now, and this is the trick that he uses that I think everyone should use, he says, okay, is there similarity in terms of what happened here? There's a big move and price find itself on the 4 hour. So there's kind of a big move. It's different than this big move, so that's something I might take into account, and as a result, stay away from the market. and then price pulls back and finds itself on the 50. Is it on the 50? No. So what does price need to do? It needs to make a big move, pull back, and then find itself on the 50. And if price does this, then I can trade. So right now, all this client would do without any other rules would say, nope, I'm not touching it. That's it. Because the trick is done. It's in front of him. He knows what the market needs to do, and it's not doing that. He knows that the next move is this. If he's gonna get a trade, that's what it's gonna do. Here. If UJ does that, this client will trade it on a lower time frame. Otherwise, there's nothing to touch. That's a phenomenal trick. Remember the good trades. Take a photo of the perfect example of a trade. Have it there. Is there similarity? Does it look exactly the same? Or does it not? It doesn't. I'm done. I'm done. You know? iPhone says, would the time after news on Friday at like 12 your time on US 500 be valid to follow on lower time frames if 1 hour is our context time frame, or is the too choppy wiki on higher time frame? I don't know. You should look at it and then compare a photo. Kind of like I just looked at, right, with you. That's kind of the rules you want to go through. Comes out, gives a trade, falls off. I mean, I don't see anything in here. If this is the context time frame, I mean, this is so choppy. This is huge moves, just random. Up here, just huge wick, comes down for a second. I mean, maybe there's a trade in there, but I don't know, man. Yeah, it's just huge move down. Yeah, maybe something in here. If you traded it, sure, but I would not touch it personally. Again, compare your photos, right? If your rule was simply that, hey, price did the move and came to the 50, then yep. Then you have a good rule here, right? That's where you should now be looking for your lower time frame to make like a big MB. And this is an hourly, maybe you look at like a 6 minute or a 5 minute, right? And as it does that, does it build an MB? I don't see one, just falls off, takes off, comes down, maybe this one, but it doesn't look like any of the other ones we've traded. So I don't see a trade, no. Again, go through the rules. Don't just say, you know, hey, there was big news, but can I trade it? It's like, okay, I don't know. What are your rules showing you? Mm-mm-mm-mm. 12% it's already funded. Yeah, like I said, right? Based on the rules that you're using, you could be funded. Did I delete it? I did delete it. But yes. Right, I mean, this thing has retained a good context all the way through. The Warren Buffetts of the world simply buy, wait, buy, wait, buy, wait. They start buying, but it never comes in, so they wait, and they start buying. Then it fails, then they start buying. Then it fails, then they start buying. Then it fails, then they start buying. Whoops, then they start buying. Then it goes, then it fails, then they start buying. Then it goes, then it fails, then they start buying. Then it goes, and it fails, and then they exit. And then they wait, and if it's still bullish, they start buying again. Right? Trading does not have to be a complex thing, and once you realize that this can make you money, much less, because you don't have the kind of capital these guys do, once you realize that this kind of thing can make you money, then you start realizing that all your job as a trader is to refine mini versions of this that you can now trade and then get in and then execute and then manage. Is it also possible on the lower time frames? Of course. Of course. Let's say your context time frame is what? An hourly, okay? If your context time frame is an hourly, what happened this week? You had a move start. That's institutional bullishness, right? You had a flush out. What do you think is going to happen here on a validation? It's going to be under a 200, and then it's going to reclaim it. And once it reclaims it, that's going to be a entry. So on the validation would probably be a 6 minute, right? Yeah. And then a 1 minute would probably be an entry through an MB, right? Now, I don't know if that's going to be the case. We can go ahead and take a look. So we know that on a 6 minute, it's likely going to be under the 200 the whole time. Let's see. There we go. Ever since the failure, it was under the 200. So we wait. What do we wait for? For price to get above this. Because we know once it gets above, it should start producing trades on a lower time frame for a long. Then it should pull back to a 50 and produce new trades for a long. That's it. So we have an expectation on the week, but for a lower time frame. So let's wait for that. Price plays around, comes over the 200. We can start watching a 1 minute, right? Exact same thing. Price moves into clear accumulation. Now we wait for a longer term MB to trade this. So you might wait. Right, longer term MB. You can buy stop the MB, stop under the low. Just like that. Prorate it to the low. Builds a long-term MB. And you can just do like a 1 to 3 or a 1 to 5, whatever suits your fancy. 1 to 3. That might have taken you out, but if it did, you can rebuy stop new MB, but nonetheless, goes higher. So now we know that the 6 minute is going to do what? We know the 6 minute now should pull back to the 50, because after a big move, past this kind of move, it tends to pull back to the 50, and then it'll create new moves on a lower time frame to keep going. So pulls back to the 50. Now we can look at a 1 minute for a new MB to buy stop. Look what it's doing. Here's a buy stoppable MB. We buy stop the MB at the high. We put the stop under the low. We look to take it long. We wait to get tapped in. We wait to get tapped in, and we just sit on the sidelines and let it do its thing. Okay, you get tapped in. Now you look for your what, like 1 to 3? 1 to 3. Here you go. Now again, you expect this thing to now take off as it needs to. Okay, sure. Now as it goes, you know that the validation time frame now needs to flush out again for you to trade it again, because now you're used to the fact that you're in a deeper stage 1. So now you need the 1 hour to flush out before you can follow it again. So we wait. The 1 hour flushes out. So you know the 6 minute is likely going to be at the 200 or under. There it is. As it gets above, you know this should produce lower time frame entries. So you go to a 1 minute. The 1 minute starts to build a longer term MB, but it's during, it looks like rollover. So you might ignore it for a little bit. Just give it a little bit of time. If it takes off, that's okay. Right, let the rollover pass. It looks like that was rollover. Right, kind of builds this much longer term MB. Looks fine to me, right? It looks like a longer term one, so whatever. Look for your 1 to 3. See if you get tapped in. If it taps you in, okay, cool. The 6 minute should now do what? It should take off, come back to the 50, and there's gonna be an opportunity there. Comes down, so you wait again. It flushes out beyond the 200. Now you might wait for it to come back up over the 200 and follow it. Maybe you don't like the way that it's moving in terms of the higher time frame, so you might ignore it for a little bit until it gets back above. It does, but because of what you took before, you ignore it and wait for a flush to the 50, so you wait. Comes up, you wait for the move to the 50 now. Nothing yet. Comes to the 50. Now you go to your 1 minute. What is this? We had 3. This one's still going. Ongoing. There we go. You look at your 1 minute. Overall accumulation is met. Price comes down. It's kind of building this large MB. I would say something along these lines here. Just through all these MB highs. Take the buy stop, stop under the low, 1 to 3. Wait for a trade. Again, continues building that. Just edit the stop. Comes down. Cancel this. Wait for a cleaner MB to be built. Some cleaner sideways action, hopefully. right? Goes into distribution, you ignore it, starts going into accumulation and builds up basically like a very nice longer term MB here. You might even make it a little bit bigger to give it time to tap you in. Throw the stop down, look for your 1 to 3. Keeps building that MB. You know, it just buy stop the high now. I'm almost refining it now, but whatever, doesn't matter. Comes down lower, builds a longer term MB. You might even ignore this as it's under all the 200, so you wait now. Starts taking off again. You can look at this as a larger MB. Buy stop the high, stop under the low, take it higher. Again, for the people asking about the lower time frame, you just repeat the same exact rules. There's not much to do outside of that, right? Falls down, you cancel this, take a look at the 6 minute, right? Finally starts failing everything again in distribution. You might ignore it now. Maybe even go back to your 1 hour to see where it's at. Right, it's still in a flush, which is good to see. So you might still consider trades on this thing. Gets back up above the 200 within distribution. Part of a new potential leg. Same thing. Start watching for your lower time frame MBs. I'd probably wait for this to go a little bit more sideways and then buy stop it. Right, like you can come at this with relatively simpler rules to start with if you wanted to. Right, just buy stop the overall high. Stop under the low of the MB, 1 to 3. Same thing, still valid. Just building out a longer MB. Yep, still building it. You wait. You know the 6 minute is just over the 200, so if it wants to take off, then great. You can be part of the potential next leg. I'm just waiting for it to do whatever, so we can go look at it on the 6 minute. Okay, great. So now you know the 6 minute, if it does take off, you know it's probably going to do what? It's going to take off and come to the 50, and that's going to be another opportunity if you're not in a trade. So it should now flush to the 50, and now the 1 minute should begin to set up another MB that you can buy stop to take a 1 to 3 on. And if you get tapped in, you know by that point you shouldn't be watching anymore for more trades because you're likely in the done early stages of stage 1 and 2. So then you wait. I'm trying to go faster on this. Do we get tapped in? Yep. So you go to your 6 minute, and you manage this thing. You probably move this to break even because you're taking a new trade now. So if it comes back, it is what it is. Oh, this one did a +3. This one's still ongoing at break even at the moment. This one's a -1 at the moment. Okay, this one gives you a +3. Now you know that if you want to take another trade, the hourly needs to reset again or needs to flush out. So unless this flushes out again, you can't really take an entry. And then you wait for this one to deliver or fail. It comes down and fails, that's a -1. But then it flushes out, so you watch your 6 minute because you know the 6 minute is likely going to be under the 200, and then it starts to reclaim the 200 in an accumulation. So you look at a 1 minute, so you look for the MB, you wait for the MB to form, so you can take the long, blah, 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 blah. Yes, it's applicable to anything. You should know by now that what I teach is not a one time frame approach. 3, 6, 9. Let's assume this was a loss because it did the wick, even though it's not a loss. Let's just assume it is. I don't care. 3, 6, 3. Okay, right? You made 3R. What is this? How much time is this? In 4 days. That is a phenomenal return based on the kind of account you might be trading, and more than enough for some people to make their month. Okay, and all we had to do was look at an overall market that showed general bullishness, wait for that market to meet the rules that we just looked at that were very simple, and basically throw a dart at the MB now instead of just randomly. Okay, so yes, Gemly, and for everyone that ever asks about timeframes don't exist here. We simply follow the rules around the time frame that we want to trade. That's it. Got to run early. Thanks for all you do. No problem, man. I love you. See you later. Can you please demonstrate this using the CS entry on a higher time frame, maybe the weekly? Test it the same way, man. Test it the exact same way. If you want a CS entry, then go look at the entries that were available here. So here was an hourly. You wanted to, let's say, enter them. But instead of just entering through those buy stops on like that 6 minute or the validation of a 6 minute, where price was like in here or up here, where you were going to buy stop in here, go and test what you could have done instead. So like on a 1 minute, if you didn't want to do that, and instead you wanted a higher time frame entry or a CS entry, you know, what are the CSs that would have worked? And where were the ones that wouldn't work? Well, it seems when they're above the 50 and you get a CS, that would have been a trade that would have worked. But again, like you just run the test on the thing you want to trade if you want to trade a CS. Or you said on a higher time frame, so okay, so just trade on the hourly then. Instead of going back down to a lower time frame. So instead of going down lower here, you could theoretically, if you really wanted to, just buy stop a high. Buy stop a high. Okay? Schelling said it's like a CS entry on a higher time frame. Okay, sure, yeah, I mean, it's like, yeah, it's buy stopping an MB, buy stopping an ICI, buy stopping a CS, however you want to call it, sure. You know what, I'm actually interested. At what price did Buffett initially buy Apple? That's what I would be very interested in. His first trade was in 2016, quarter one, 2016. Oh, perfect. Guys, whoops, 2016. This is when he initially bought Apple. Now tell me if you guys could orient that this was a bullish context at the time of his first, there's no way that's his first buy, is it? When did Buffett first buy Apple? He first began in 2016, yeah. This is when he first bought Apple, guys. This. Think about that for a second. The context was there years before. And he said, yeah, there's a flush. I could throw a dart at this thing a few times. And now his position has made him, because remember, this move here is 500%. Let me do it logarithmically. There you go. That's where he bought it. That was 2016. He threw the dart and he held. Wow. So impressive. He bought a bullish context after it proved itself for over years beforehand. It was bullish since 2001. Blueprint, accumulation, surfing the MBs higher, multiple flushes, moving higher. He bought after this flush. That's it. Reaccumulation flush, he bought in. And he continued to add on, likely after other flushes occurred. As flushes occurred, he likely bought more position. And as prices went higher, he sold some, and is now likely buying more. And if it goes, he will sell some. And if it fails and the context becomes shit, he'll sell the rest. And he'll make a few thousands of percents on a few hundreds of billions of dollars, and all of a sudden, he's a genius. Take a look at the actual things that, you know, the people that you might even look up to are buying, and look where they started buying. Look at the action before they started buying. This market was screaming what it wanted to do years before. Over a decade before he invested in it, it was screaming what it wanted to do. And then he entered it. Okay? Please, what is your calculation for time frames? I didn't get it when you just said it now. Times 6 or times 60? Or times 10? Times 6 or times 10, basically, between each skip of time frames. NQ. The webinar from 4 months ago, this is where I started my green box. And expecting it to take out this high and come up into around this price action, this area. And then that's 4 months later. Yep. Again, I don't do anything crazy. I just look at the trend. I understand the trend. I look at the context. I look at the screener. I then apply the things that I'm used to seeing to the market. That's it. Should I cut the 4 hours? It might be overcomplicating, Luca asks. If you find yourself profitable with using it, then use it. Son, when will you be releasing the new remastered content? It's called the Mastery section. And soon. Jesus, iPhone says, I asked you a question, can you answer please? And you asked Jesus a question? Michael says, any tips for learning how to use a DX Trader platform for competition? Never used the GUI Trade before. Well, it's not on DX Trade. It's on MassTrader, but either I or Dan will make a video on how to sign up properly for the competition and then get yourself an account and then start to buy or sell and do all that stuff within it. So we'll focus on that in the coming day or two. Got to go early. This webby was really great. Appreciate you, Kevin. I'll see you. Herman says, gotta go. This was my first webinar. It was really amazing. Joining this mentorship was the best decision of my life. Let's go, man. Anyone know how to get on GUI Trade? Yeah, follow the stuff in your email. Anton. Please, how does he calculate the time frame? Either multiplied by 6 or multiplied by 10. Oftentimes I do 6, 6, 10, okay? So if you enter on a 1 minute, you can look at a 6 minute, a 36 minute, and a 360 minute. And then you could simplify those if you want to a time frame of your liking or something around them. You can double any one of these, divide them by 2, up to you. You could use, for all I care, a 1 minute, a 3 minute, a 30 minute, and a 10 hour. You could use a 1 minute, a 15 minute, a 1 hour, and a 1 day. You want to just have generality, a general consensus, a general link up, a general consensus, a general link up of the time frames with a generally, like, from 1 to 1, some general closeness. Because again, based on the conditions that you trade within, the time frames are going to fit you a little bit differently. This is my backtesting curve. I did 3 major refinements that you can probably spot by looking at the equity curve. First one was introducing a 4 hour. Then again, some periods where I thought the lower times would look good and I waited for so long. Why is it like a download thing? Do you have just the image, bro? I can look at it. But logically, even if it runs, how likely is it that it hits 10 plus RR if the higher time context is meh? Like, it's so simple but hard to just wait. Yeah, I mean, people don't want to wait. As a trader, especially as someone that hasn't made $1 million from trading, it's very easy to sit there and just think you need to be in everything because you're like, fuck, I need to perform. But the reality is 80% of price action is not for you. It shouldn't be traded. Have to go. Have a good one. I'll see you, man. We're probably going to wrap this up in a second anyway here. We're about 2 hours in. Could you briefly explain the FMB entries you've been doing lately that are different from the cleaner ICIs? Yep, in the mastery section. But generally just by stopping through an MB that's clear. And all those positions are still open as he holds for 50 years. Yep. Thoughts. I don't have much here. That's the thoughts. You have a 30-minute chart with a big move, a huge flush out, and a move back up. So that's all there is here, right? But yeah, maybe. Anton, what kind of data would you recommend we collect if we're struggling to recognize late stage ones? Models and MAs across timeframes. What do you mean by that, man? What kind of data would we collect if we're struggling to recognize stage ones? Not 100% sure what you mean by that, to be honest. I would go through the process that I kind of showed today for starting to identify multiple timeframes, taking note of what the market did before a big move, getting used to that, and then comparing it to shadier context, and then comparing it with the images that you've taken prior. Because that's the best way to do it. Yeah, well, that's good. Yeah, a lot of crypto is doing really well. Has been doing really well for a while. I took some this week. I don't think we ended up doing much on it. Yeah. Just took a break even on this. I really thought this was going to take off. I'm not gonna lie. I really thought it was, but rules are rules. Love how he always takes time to show multiple examples every time someone asks a time frame question, even though he's done it 18,000 times. I appreciate you, Jesus. Do you always want to manage on the validation time frame because of the possible pullbacks to the MAs? I prefer to manage on a little bit of a higher validation, yep, because I want to be in more of the move. Of course. I like the simple step-by-step system, and also spreads and commission are no longer a problem with this. Yep. I just wanted to show that, like, you guys don't have to be sitting there every single day like a lot of people are in most mentorships, like just on every candle, just like I need to like maybe be a buyer here, I can probably be a seller here. It gets so wild what people are doing. Like, you guys don't need to do that. That's not what trading is. Trading is creating a story about where you are, what the market's been doing, and then following the moves that you're used to seeing a market make, and then walking away when it doesn't. The more stuff you trade, the more random you keep your stuff, the more random the price action you trade, well, the more likely you're going to start trading stuff that's good, but also the more likely you're going to start trading shit that's random, right? And completely chopped up. About $35 per share. There you go. I've tested the trigger direction count using 20 MA and entering the ICI that retests the 20 MA. Nice. Yeah, and notice something here, right? Like, the entry that happened, now I don't know what the other ones look like, but the entry that you took here, right, it happened after price flushed under the 200. Built up, let's say, a big MB or an accumulation, came out of it, and then you buy stopped it, right? If someone else had just buy stopped here and put a stop here, that's still a valid trade based on what they're looking for, right? Yeah. Yep. And notice something interesting about it. It was also the first time the price flushed out, came up higher, and this was the first, like, stage 1, 2 to start a move. Kind of like the thing we spoke about today. Elton says, what is a flush? It's when price starts moving in a direction and then flushes down. Like a pullback, you can call it, yeah. Buffett using simple rules just looks impressive as he's one of the richest men, so people are in awe. Yeah, I mean, like, when you start putting what he did into a chart, does everyone understand that any one of us, if you really want to put it that way, could have caught the same move right here? However you want to buy it, you could just buy stop the highs and then continue doing it through every flush, through every flush, through every flush, and now if it flushes out deeper, through every flush, right? Does everyone understand? And this is, again, remember, this is where he started investing. Not here, not here, not here, not here. Definitely not here at the lows. Not even here at the open. He started investing in this thing here. That right there is where Buffett started investing in Apple. The money, the institutions, the smart money proved itself years before. Then he entered. That's where his money's made. Adam says, I wasted a lot of time waiting for price to come back to S&D zones and then giving me the entry signal like I was taught in other SMC groups. Today I learned that waiting for price to come back is not needed at all, much easier and less stressful. Yep. Again, if you're on a very low time frame, I'm sure you even understand, Adam, why it can work to wait. And it's not even that terrible to wait. because it does happen a lot, especially back and forth throughout a day. But the reality of a move is that the way I like to think about it now, and the way that it'll be taught, is that, you know, if there's real money behind a move, if real money was accumulated, by the time the supply has been absorbed, let's say, and demand takes over, is there a reason to come back to where demand initially entered? Or do you think every new demand of that same institution, of the same buyer, is going to come in higher now, right? Do you think it makes sense for their move to come all the way back to where they were so they can buy more? Or do you think the fact that they're now in profit, they want to maintain the profit and potentially add on before they go into any drawdown? The second you start to think about how large money interest works, I think you start to recognize that when you have a true move, it doesn't want to come all the way back, you know? Corey just came back. Welcome back, first of all, but you'll be back on board in no time, man. You'll be chilling. Any watchers this week? Yeah, I'll finish it out with just a quick kind of rundown. Damn, I was so ready for gold as well. Like, if you guys look at this looks exactly like NASDAQ did. If you look at this right here, and then look at this right here, they look the same, right? Or what this right here, like this looks exactly the same, and then it made a huge move. But instead, it started the move and then it just fucked off to the downside. So gold's like off my list for a bit right now because, yeah, I mean, I think this needs some time now again. I don't know, what's the weekly up to? Yeah, it's a hard one. It might need a little bit of time now. I'll probably be sidelined on this for a little bit while it chops around. So gold's kind of off the list for now. GBTC, so Bitcoin, I like it. Looks good. I'll keep watching this thing for longs. I should not have traded this thing, I believe. Based on, yeah, I should not have traded that. NVIDIA is way too extended now. I traded it one more time through this little sideways and got a really nice move out of it, but I took partials and full profit really quick, and I just expect this to chop now too. Took some nice losses on this, I believe, right? Yeah, I took a loss. Oh no, it was a break even. I took a loss earlier and then I broke even on this. Yeah, Cocoa was so clean. Cocoa was like perfect. I might come down for a bit and then take off this week for a really nice move if we can get a decent reset on this. Not clear. I need to do a full refresh of my own watchers. But right now I think my only watcher for the upcoming week is probably Bitcoin. Gold's like off the list now. NAS is just chopping up at the moment. But where are we on the daily here? Yeah, so started the stage 1, stage 2, and now it's getting a little loose. I think we're gonna pause here for a while. I don't know. I do think we're gonna pause for a bit. I usually don't like these kind of moves. Yeah, I mean, I don't have much on my list this week except for probably UJ. UJ is the only thing back on my list right now, in my opinion. That and like Bitcoin, and I got to do a full refresh of other things, but I think UJ actually looks pretty good now. I will look for a long on this thing for sure. Coming into the week. Yep. Right now it's really just UJ. Marie says outlook on gold. Yeah, it's awful. I mean, it was really good. It was ready to make a crazy nice move. It was setting up for that perfectly. I really wanted to trade this thing higher. But then it just failed down. So now we're back at doing nothing. The outlook on this is don't touch it, for me personally. Ment, what is your rules around context and validation time frame? Check out any recent webinar where I break down any trades I take. There's a lot of them, though, of course, right? But it was all developed with the same rules that you kind of saw me go over earlier today. Ment, have you tried 3-digit lot sizes on 5-minute charts with like 4 to 5 pip stop losses? I used to enter like 100 lots for 1.5 pips or like 1 pip, and I would eat a shit ton in commission. So, yep. And they're pretty bad slips, which is one of the reasons that I started to work on upping my time frame, which of course led to a redevelopment of my understanding of the market. And look, when you look at the stock ESPR, initial investment was $1 billion. Yeah, so exactly, right? Warren Buffett put $1 billion in 2016 into this thing. Again, the money doesn't matter. What matters is, you know, what did he see? He saw a good context. That's what he saw, and then he started entering it. That's it. Maybe 5. Yeah, it looks good. Very liquid though. Would not follow this at all. Very shit market. You explained that very clearly on remastered S&D section, like why price doesn't need to come back to the zone. Yep, exactly. Got out of gold just at the top. Good for you. Yeah, I mean, if you were trading this thing on a lower time frame, then perfect, right? It had great setups along some of those lower time frames, for sure. All the way up. It had decent setups, and then it fell down. And of course, the people that were preying on its downfall are finally maybe making some money on it, so good for them. But again, I'm not here for these moves. Like, you will never see me profit on a move like this, ever. I will almost always be taking one loss, or I will not be in the market at all when this happens, right? Because I'll be taking the loss. Like, if I take a long in here, then get out of it, and then I'm out for the move. Do you invest in stocks for dividends or not? No, I don't. Do you check your screener for good markets to trade? All the time. It's the main thing I use, which is why my main priority right now is building out a screener that has everything. That has FX, stocks, and cryptos. So I can literally just, and futures if we can. So I can just look across everything and say, here's what I'll watch. Yeah, and Jesus got it just right. So this is kind of be the last point before I wrap this up, because we're about 2 hours, 10 minutes in. Some people are shuffling out, which is all good. But, you know, he said, how, in quotation marks, how could I have shorted gold and catch that move? You know, that's what a lot of people are doing. You know, a lot of people are sitting there trying to wonder how they could be in this beautiful move so they can now catch it. And that's fine. If they want to build an edge around trying to predict tops and predicting perfect reversals, then they can. 2, 3, 4, 5. That's actually hilarious. Could you look at CJ and AJ? Would love your input on them. Probably the same as UJ, bro. That's likely why I didn't answer the question. Like, yes, it looks like UJ. Yep, it looks like UJ. All right. A lot of XSXJPY is showing the bullishness. I'll probably be on UJ just because it's much more liquid. It's one of the majors. Okay? CJ and AJ look fine. Okay? Off to get some dinner. Have a lovely rest of the week. I'll see you then. All right, guys. Get on those competitions. Make sure you're using them. Even if you're not winning, it doesn't fucking matter. Okay? There's a chance that you win. It's just... It's free real estate, okay? Use it. Thank you all so much for showing up this week. Thank you all for being here. I'm going to wrap this thing up right now. Much love, guys.